station of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to John in Orlando. Hey, John, what's going on, brother?
Hey, Tom. Good afternoon to you. How are you?
I'm doing great, man.
I want to thank you, first of all, before I ask you about the star. You and Timord and all the gang at TFNN. I had a really, really good year after the October call you guys made. My 401k is up 72%.
Congratulations, man.
A couple of things I made with Coinbase and other stocks that I made, and I've had a good year.
And we appreciate you growling and prowling with us, man. That's a beautiful thing.
Now, Tom O'Brien.
Hi, everyone. Basil Chapman here, sitting in for Tommy O'Brien. This is the Tom O'Brien Show, and we will have Tim Ord on at the half hour. We're looking at the Dow up 197 at 45,711. Almost made a new all-time high today. Acting really well. You see this 9-period moving average right here. This is the daily chart on the left. That green line, that's the 9-period moving average. The 14-period moving average, the black line, that is below, and that's really positive. It goes pink when it goes, the green goes under the 14-period moving average, it'll go black. It'll go pink underneath the black line. So right now it's very positive. It's way above the black 14-period moving average, and that support is at 45,353. The 9-period moving average support is at 45,465. So this is really important at this particular time. And you can see we're making slightly higher highs in the weekly chart. The technicals are still very good. It's a little bit of a struggle actually in price to be making much higher highs, but there's a lot of resistance. In the meantime, we've got the S&P at this particular moment. S&P didn't get, so far hasn't got to, the week is young, but we'll see if this week it's able to get to 6532.65 to test the all-time high from 3 sessions ago. It's acting very well. Right now it's up 12.5 at 6507.6. The weekly chart still, there's absolutely nothing wrong that I can see in the weekly chart, still very strong, very good. Let's look at the QQQ. Index 100 trading vehicle. It is up 99 cents at 579.85. There's a resistance level right here at 571.53. That's from the 5th. And then the major all-time high is from the 13th of August, and that's all the way at 583.42. I shouldn't say all the way. It's really just a hop, skip, and a jump to that level. I want to go to the IWM. That's the Russell Small Caps, the 2000. That's down at $1.46 at 236.79. 239.68 was the high from Friday. The all-time high made a double top. Have a look at this monthly chart here on the right. Look at this all-time high back in November of 2021 at 244.46. Pulls back, goes to 161.47 October of 2023. Rallies strongly. And what does it do? It goes within pennies of the all-time high on November of 2025. 4 years later, it goes to 244.98. I love the way these huge. These are indices. These are not individual stocks going all the way from an all-time high very sharply lower, then comes all the way back to within pennies, and then it pulls back again and goes to the 170 level. And then what does it do? It comes all the way back, and right now it's at 236, and the last high was 239. It's within, really, I would say an eye blink, but it's a little bit more than an eye blink of the all-time high. And that's the Russell 2000. I just want to do the SMHs because they're very important. The semiconductors right now were up earlier on, and now they are up 44 cents at 296.93. NVIDIA is actually one of the weaker ones. They're actually very, very well. And now we're looking at the August 13th high of 302.98. That's the all-time high, and I think that should be challenged. That should be challenged, hopefully, in September. So far, so good. All right, now what I wanted to do is this. I wanted to go to the TLT. That's the Lehman 20-year Treasury bond ETF. and that is at 89.34. It's down 40 cents, but that went to what we call in the Chapman Wave peak D in the weekly chart, leg D in the monthly chart. That's usually the objective of a buy signal that's upgraded to a buy mode, which this has been. And now we want to look at the TBT because it's arching over. What is it doing? It's arching over, and it's suggesting, certainly from this daily chart, that the trend of the yields is so far down, and it's been confirmed as being down, but we have to see what happens. I think the Fed is the next Wednesday. What's today? Tuesday? A week from tomorrow, I think it is. Fed comes in, and that's going to be a very important meeting. Okay, so now gold is trading up 1. Now it's actually only up 0.2. I said only up, but it was an all-time high earlier this morning at 37.15.2. It's come back to 36.77. Maybe it's starting to lose a little bit of energy, but if you look at the same technicals we were looking at before, the 9 is way over the 14. That's really strong. The MACD is still expanding. The histogram, that means the distance between the green and the red line. This gray line here is the relative strength index, is doing very well. The stochastic, the blue line, is a little bit overbought, but that's the on-balance volume. But the stochastic, the slow stochastic, is at 95%. That is fabulous. That suggests that any pullback is going to have to really garner tremendous downside activity to really break down and go back under 3,550. But right now, I think what we're looking at is any digestive phase will be a process, and then we'll start on the way down. But so far, it looks like there's just a little bit more left to the upside, and then maybe we start some kind of a digestive moment. So I wanted to do all that. Then I had a question just before I came on the air about Olin, Olin's chemical company. This is a very old established company, Olin Corporation, chemical products. It also has it has ammunition. I didn't remember that. It has chlorine, bleach. It's really integral to the processing in the chemical area, and it's done really well in the daily chart. Look at this all the way from 18 to 20, where it is 25 right now. The weekly chart, it's been a long process, like a rectangle. Now it's at the upper end in 25. I like this very much. The monthly chart, I don't even talk about it. It is horrible. The weekly chart is just improving. But the daily chart is suggesting that, like the IWM, like the Russell 2000 small caps, this is in an area that's just starting to garner some kind of buying validity, and I think I like it very much. Maybe here at 25, 24, 26.45 is the 200-period moving average. It has not been there in ages, so that would be strong resistance. But I would say between 26 and 23, that's probably the area that's going to be very beneficial to the buying of Olin. OLN. 25.24 right now, up 21 cents. I do like it. I think on a very short-term basis, it might be a tad overbought, no more than a point and a half. So I do like it. I'll be back in a moment. Basil Chapman sitting for Tommy O'Brien, and this is the Tom O'Brien Show. The Dow's up 150, the S&P's up 10. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in a fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits. The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Hi folks, Basil Chapman here, sitting in for Tommy O'Brien. This is usually where Tommy interviews me, but since he's not here, and it's a very difficult thing to do because, you know, you've got to have humility, and the market has a way taking hubris and bonking you on the nose with it. But what else if I don't explain what I do? What I do for my subscribers to the opening call is every day, every market day, I do a newsletter that has, let me see if I can find it right now. I'll just do this really quickly. So the newsletter, where did it go? There it is. I do a daily call every day on the Dow. Look, here it is. Here's the Dow. And basically what this does is the three-panel, this is the daily chart. Here with the 9-period moving average, a couple of moving averages, and the Chapman wave notation. Here's the exact same chart, except this time I've got the MACD, the moving average, convergence, divergence, slow stochastic, on-balance volume, a lot of the technicals, plus automated Chapman wave support and resistance levels, and here's the 120-minute chart. And then I write a little a little thing that says what happened yesterday. Dow closed up 114 at 45,514, and then I go on and I tell you exactly what to look for, and I say today, if the Dow is up over 70 after 130, expect a good up close, while minus 50s or more, expect weakness remaining in the rectangle formation. All right, so I do a summation every day. Then I also do the newsletter. Let me just move this over here. So what I do in terms of the newsletter is I do a review quickly of all the things that we have. So let me just run through. I give the opening paragraph, tells you exactly what we're looking at, why we're looking at it, what we want to be buying, what has worked, what isn't working, etc. Just a real quick summation. And then I tell you all the positions that we have, what happened the day before. And then I run all the, for instance, there are 17 bullet points, 17 numbers here, and these are positions that we have, we've added to, we have subtracted. So let me just run, for instance, we have AIQ. AIQ is the Global X Artificial Intelligence ETF. As we're speaking, it's at an all-time high. We have Bank of America made it. Our target was an all-time high in the 50.11 area from 2021. Well, it did that the other day. It went to 50.81, and then it made a little double top. It's still acting really well. So that also is almost at an all-time high. CDE, core mining. We've got that for a long time from under 8, and here it is at 14.24, 78, almost 80% winner. It's done. This is core mining, all-time high. GE, all-time high the other day. We don't have much left, but we still have GE. It hit 284.41. We're along from the 198 area. So this is also very close to an all-time high. Robinhood, we've had for quite some time. Actually, we've had it since it was in the 16s. We've got not that much left anymore, but here it is at an all-time high at 118.70. Leg D there. We're always waiting for Ds, and there's the D in the weekly chart. Very nice gain, 117. We've got, there's some that we've got, I don't have to mention them here, at all-time highs. Then we've got Bitcoin. We've run it all the way to the all-time high. We still have it, but I'm not very happy with it lately. We still have the core position in the iShares from quite a bit lower down. It did this double top. I just think it's digesting gains after having a fabulous move. Then we went into something the other day because I said if we start to have some weakness, we've got to have something that shows strength, and it's in a new area for us. So we've got Iran, IREN, Iran. I don't even know how to pronounce it. It's Iris Energy. IREN is the symbol. It's trading up $4.29 as we speak at an all-time high, 30.47. We're in from the 22 area. And so it's done everything we've wanted to do, and really a nice move today. Then it got, on Friday afternoon, it got mentioned that it's going to go into the S&P 500. Well, this is the result. Absolutely, but it's in an area I love. It has next generation data centers, renewable energy, GPUs. I like it very much, and that's the reason why we got in there. So we've added 2 positions this week. One is in the single digits, one is in double digits, and one we had a long time ago. It made a fantastic gain for us. We haven't been in it for ages. We got in the other day. We just got stopped out. I didn't want to get stopped out, but it did get stopped out. So we've got back in it because I really think that this is in robotics. For warehouses, etc. So what else do we have? We have, here we go. This is one we bought a long time ago, and we did very well. And I've just kept it for a while, kept a kind of a core position. Solventum, it's a spin-off of Triple M, healthcare spin-off. And here it is at... let's see, what is it? It's at 73.10. It's down $1.50, but it's done very nicely. It went from the 50s that we bought it at to the 85.92 area back in February. Then it pulled back sharply. Now it's just gone sideways. And I have to think about it because I do believe that Solventum Core healthcare spinoff from Triple M in the healthcare area, 96.05 was the all-time high back in March of 2024. I think it'll be back there, but I'm going to be monitoring this one because if I think it's going to go sideways for too long, we might just trade out and go to something else. So I like for my subscribers to have price points that they can feel comfortable with. So we might have stocks in the single digits, double digits, triple digits, whatever I think is appropriate. But I try to balance them off by having some that are low priced, that are kind of teenagers or in the 20s, so that some people just don't really feel comfortable putting a great deal of money into a single stock, and they like to spread things out. So that's basically what I look at. And the other thing that's really important is that we are still long. The Dow, we have a long position, still have a long position from 2020. We've taken some gains. We've got a core position in that, and we've got a core position from 2022 with the low. And we also have the 3 times long from way back, and we also have it from April. So we are looking at long positions. I am getting ready to see whether or not we have we've tried short positions before, taken really tiny losses or tiny gains, nothing extravagant. I don't feel anything. Look at these weekly charts. Look at this Dow weekly chart. It is holding so well. Even it did pull back sharply, going from 45,700s down to the 44,000 level, to even 2,000 points. You'd expect something like that after a fantastic move since the April low. So I'm just being prepared. I'm trying not to get too carried away. And at the same time, I'm trying to develop as much patience as possible. Patience is a watchword in the market that you really need to have, because sometimes things go down, but they come back. If you have very good stocks, they tend to come back. So I'm looking at it as if it's something that looking out we are preparing for the next part of 2025. And that's not ignoring IWM, the Russell 2000. We did have it a long time ago. We haven't had it for a while. It's doing very nicely. And this rotation says, as I said with Olin, I don't know if Olin is in the Russell 2000, but that's the type of stock that I think is starting to improve a lot. So there are going to be a lot. We've built up a cash position because we're wanting to be buying in this particular phase. So with that said, I'm just a little lost. I thought there would be some music, and I'm not hearing it. Let me just quickly check because I want to see if I may be doing something wrong here. Usually everything just goes, got it. Good. There it is. That's the music. Phew. I thought I did something wrong. Music is here. We've got a break coming up, and then we will be back with Tim Ord straight after that. Oh, I never mentioned the gold. We are still long our gold and our silver, as I say. So we're trying to broaden out our portfolio. I'll be back with Tim Ord soon after this. We've got one break coming up, and then he'll be on.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi folks, Basil Chapman sitting in for Tommy O'Brien, and this is the Tom O'Brien. We'll be with Tim in a moment. I just wanted to say in the den, a question came in about AGEN. AGEN is Agenus Inc. Immuno-Oncology trading at 487. It hit the 200-period exponential moving average. If it's able to move into the 5, it just has to touch 501 once, and then that whole candle, that ugly candle of early August that goes into the 5.30s will become a target. Most importantly, the 460 to 440 area right now is support. Tim Ord, how are you?
Good. Thanks for having me on again.
Great pleasure.
Go ahead.
So, yes, please. So, Tim Ord is the Ord Oracle. He is the Oracle, of course. He's been speaking to us about gold and silver for quite some time. He's been a bull. Tim, could you just tell us how to reach you and then go right ahead and tell us what you're looking at?
All right. You can catch me at www.ord-oracle.com. My email address is tim@ord-oracle.com. So that's how you can get a hold of me. So I'm also on Twitter. You can, you can look me on Twitter, oracle.com, I think, or @oracle.com gets me on Twitter. So let's look at the market. The first chart here is the SPX. Give me something to draw with here. This is the daily SPX tilt ratio, and you can see what's going on here. You know, usually
just one second, Tim. There we are. Okay, we've got the charts. I just didn't want you to be talking, and we didn't have. Now we've got the charts. SPX/TLT. That's the S&P and the TLT. This is the conglomerate that Tim puts together. Tim, go ahead, please.
Yeah. One's the SPX is the equity market. The TLT is basically the bond market. So I do a ratio with that, and basically this ratio should lead the S&Ps. For instance, right here we got on the top window is the SPX tilt ratio, which is making higher highs. The S&Ps is making higher highs. Everything's good. Should go out. You have a minor pullback for it looks like about 3 days, and the market rallied up, and you notice here, now we're making lower highs as the S&Ps is making higher highs, and that's the divergence. And if you notice over the last week, this ratio went right down. I mean, just really went down, and more or less, the SPS, you can see over here on the window, this is a ratio, then it goes straight down. And where the S&Ps are still pretty much holding at its highs or recent highs, it really hasn't backed away much. That's a huge divergence. Now, this ratio can lead the market, by a week or so. So it just gives you a warning that a possible high may be forming. So that's one thing I'm looking at. And here's the other thing I'm kind of looking at. I also look at, panic and the Dixon trend. And actually, the trend's kind of high right now, which says the market may hold up. But the top window, this is on a weekly time frame. It's more of a divergence there. You can see, this is basically mid-August to the current time frame. You got a big divergence going on. So I'm thinking this S&P pattern that's forming here is a rising wedge, and we haven't really turned down yet, at least not yet. If you notice last Friday, this is last Friday's volume, and high volume highs are usually tested, and I think this high right there could be touched before we actually turn down. But you got a huge divergence going on that's been going on since 2 weeks, 2.5 weeks, thereabouts. So you got thinking, and also, this is kind of another indicator I use. This is the SPY VIX ratio.
Tim, can I just interrupt for a second? The one up at the top is a closing price indicator, right?
Right, it's a closing.
Yes, okay.
These are both right. We're talking about the SPY tilt ratio?
Yes. No,
right,
the one the one before you, the top one had a single line. I just wanted to point that out because sometimes what happens with a single line, in between, you can have a huge movement, but it's the closing price that really counts. I just wanted to point that out because that makes it even more pertinent.
Yeah, it's a closing price on the top line. That's right. And you had a big decline here. So anyhow, that's the divergence. Another indicator that I use, I like to at least have two of them. Here I'm just pointing out this is the SPY VIX ratio, and bottom window is the SPY. If both those indicators are going higher, normally the pullbacks are fairly mild. Then when you back here, basically in mid-August, everything looked fine, making higher highs, minor pullbacks, and now you're making higher highs. You can see it better over here on this bigger window to the far right. Yeah, see, here you're making higher highs on the SPY, and the VIX ratio is making lower highs. What that says is basically the VIX is starting to go up. And when the VIX starts to go up, even though the S&Ps are making higher highs, it's usually a warning sign. Again, this is kind of a leading indicator type things. It doesn't mean tomorrow's going to be a down day. Actually, I still think we'll go back up and test last Friday's high, which is basically this high right here, which is up around on the SPY is 65 and change, 652 area. We're probably going to make an attempt to test that. And so that's kind of a critical area to watch. If we test that on a lighter volume, that would add bearish scenario to it. I put it that way. So anyhow, some things I'm watching. I'm out of the market. I'm not long. I'm not short. I think it's a little bit too soon to go short. If you are long, I think last Friday's high could be a target. It depends how that's tested. So we'll see how that turns out. But it's kind of a choppy market. I kind of stayed out of the market here for trade a couple of weeks ago, made a small profit, but this range is getting super tight. And so it usually gets quiet at the tops. The market's kind of rolling over here, so I'm thinking we're going to pull back down around 6,200, basically, which is this low right here. So that's kind of where we're going. So nothing real significant to the downsides, but it's going to be a slap in the face. And that's probably a good 5% or better to the downside. So it's worth the trade. So nothing significant. Upside's about done. Downside hasn't started yet. So we're kind of in between a trade right now. So, the break's about ready to happen. We'll cover gold, which I got a lot to say about.
Good. So we've got a break coming up, Tim. You've got your timing down as always. We'll be right back with Tim Ward. The Dow right now is up 179. The S&P is up 14. And we're all waiting to hear what you got to say about gold. We'll be right back with Tim Ward, Basil Chapman sitting in for Tommy O'Brien. Be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Hi folks, Basil Chapman sitting in for Tommy O'Brien, and we of course have on Tuesdays and Thursdays we have Tim Ord. Tim, you would like to discuss the gold market. Let's go.
All right. We talked about this before on Tuesday. I just want to point out again, it's a little bit of a review, but I marked all the times where the XAU monthly ratio, so that's the gold stocks compared to the gold, and when this ratio is really high, gold stocks are expensive compared to gold. When it's really low, gold stocks are cheap compared to the price of gold. So it kind of measured the value of gold stocks against gold. And we've been basically sitting at going nowhere since 2014. It's bounced around, it looks like about 0.05 to 0.08. We're in that vicinity right now. And the point I'm trying to make is, this ratio has gone sideways 2 years there, 4 years there, 6 years there. Actually went sideways for a long time from basically 84 to 2008. So what's that, about 25 years or something, then finally broke out of that trading range to the downside. Now we've gone sideways in a real narrow range. This is a wide range here. This is a real narrow range, like 0.05 to 0.08, and we really haven't gone anywhere, even though gold's gone straight up. Gold stocks have gone up, but not any close to what gold has done. So I'm thinking we're going to break out of this 10-year trading range or 11-year trading range, and most likely we're going to probably break out, in my opinion, we're going to go back up to this 0.108. There's quite a bit of resistance there, which is basically the previous lows of 2000 or 1984 to 2008. And so there's quite a bit of resistance there, but I think we're going to go up there. Have we started that breakout yet? I don't know. I mean, gold stocks are just going kind of a gangbusters here.
Right.
And for this thing to break out, gold stocks will have to continue going gangbusters. So I'm thinking we're in the time frame that's similar to 2011, where the market went up for a number of years. And I think we're going to break out of this trading range. There's going to be we'll have consolidations along the way, but nothing like we've had over the last 12 years. Now, so how do I come up to that conclusion? Here's one indicator. This indicator goes back to 1982, and this is a silver-gold ratio on a weekly time frame. So silver kind of identifies, it seems like when silver is high compared to gold, you're at a top in the equity market. And on the top window here is the GDX going back to 1984. So it's had its bull markets, bear markets. We're back in a bull market right now. But when this ratio gets above 0.02, seems to be the magic number. Now mark those areas in blue going past. And the buy area is anything below 0.12. or 0.012, and we're still in that zone right now. I marked the times in pink are the times when that ratio's got to below 0.012, and we're coming in right now at 0.011, and so the silver gold ratio suggests equities are still cheap, I guess is what this implies. Anything above 0.02, you're getting expensive and you're probably going into a top. So this ratio really hasn't broke out yet. It's still, pretty much going sideways since 2022. And it's, to get to 0.012, 0.02 rather, gold, I don't know how far that would have to go, but it's a long ways up from here. And there's another thing so the silver gold ratio on a weekly time frame suggests that gold stocks and actually silver stocks are still in a buy signal because the silver has not outperformed gold that much to create a sell signal. When silver way outperforms gold, it's the time to sell, and that hasn't happened yet. Another ratio that I pay attention to is the HUY to NDX, which is basically gold stocks compared to the NASDAQ stocks. And this ratio goes back to 1992, and I gave a buy pretty much in 2000, gave a sell in 2012. It's been in a downtrend since then. I actually talked about this with Tom Sr. back in 2023. I remember,
yes.
Yeah, it was a wedge pattern forming, and I was looking for a breakout in late 2023 to 2024, and Lord behold, we got it. And how long that's going to last? Well, it's going to last as long, because I got an RSI to this ratio, which is the top window here. This is the RSI for the HUI index ratio. And so it got above 50 back in early, probably 2001, and stayed above 50 for a good 10, 12 years.
I just want to point out for people watching, so this is the second panel from the top. It's with that rectangle with the blue, then the pink with the line underneath the pink, and then the line as it is right now turning blue.
Right. So, so this measures, the RSI measures this is a monthly ratio. So as long as this ratio is an uptrend, normally that's when this ratio stays above 50. When it's in a downtrend, this ratio stays below 50. So what that says, when the ratio is going up, HUI, the gold stocks, is outperforming the NASDAQ stocks. When the ratio is going down, the NASDAQ stocks are outperforming the gold stocks, and that's what's going on since 2012. That's the reason why the RSI pretty much stayed below 50, because this ratio is down. Now we turned up, and notice the ratio, we're up around 65 or 65.42 be right now. And so as long as this ratio stays above 50, which I think it could for the next 12 years, gold stocks will outperform the NASDAQ stocks. Will that be true? I don't know. This ratio, this downsloping wedge pattern has an upside target to where the pattern began, and that's around 0.05.
It's still way above.
It's a ways to go up. Will it get there? We'll have to wait and see. But right now, gold stocks are outperforming the NASDAQ stocks, and I think that's probably going to continue for that. I don't think there's going to be a slop market, because this is an impulse wave. This is XAU, this is HUI. This is an impulse wave going up. We'll have a consolidation at some point, which will probably be a sideways move that may last several months or maybe even 6 months. Then we should see another impulse wave to the upside.
Just to recap, so an impulse wave, in Elliott wave, an impulse is really a major trend.
Right. Actually, you can see it real good here. Here's an impulse wave. There's a corrective wave. Here's another corrective wave. Here's another corrective wave. But in between those are impulse waves. So here's an impulse wave, and here's a long corrective wave. And here's another impulse wave and a long corrective wave. I think the character of the market is now changing, where the sideways market, I hear the news.
Yes.
But I think there's a big gold rally coming, and we're still in the early stages. I'll put it that way.
From your lips, Tim. You've been great so far. Thank you so much, folks. Check out Tim Ord, Oracle. You can check it out. Always here Tuesdays and Thursdays. He'll be back Thursday. Thank you very much for being here. Have a great few days.
All right. Thank you.
Thank you.
Bye.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Let me just do this right now because I had done this earlier. I was expecting that the E-mini would retest the 65.20 area. Well, now it's at 56.21, and there's a chance it's going to go to the 24 hours ago, 340. It was at 65.23.50, and I think it's trying to get there right now on this left side, right side price time match pattern. Two things. One is I was asked about GATX just before I was interviewing Tim. This is GATX, is a leasing and asset management rail car and tank container company. Almost at an all-time high. Well, let me just check all-time high. All-time high, as we are talking at 168.25, up 25 cents. And it's still looking very strong. And what was the question in the Tiger YouTube? GATX, can I find it? Oh, I lost it right now. I will do it tomorrow morning in my show, the Tiger Technicians Hour at 10 o'clock, but it's looking very strong, exactly in the area that you want to be looking in. I like it very much, and I think it will be going to the 173 to 175 area over the coming week or two. As we were talking, look what we got. We got another squeeze at the close. Look at that huge move. Oh, it went right above the high of 24 hours ago. Oh, this market, very hard to keep this down. So with that said, check out my opening call, my daily newsletter. As I say, we've been along and adding to it. This week we added some new positions, one in the single digits, another one at about, what was that, at 48. So I like this is the area that's working very well. So have a great evening. Tommy will be back tomorrow morning. Kick us off at 9 o'clock and check out my opening call, my daily newsletter, and my 10 o'clock show, the Tiger Technicians Hour. Hope to see you there. Have a great day. Basil Chapman signing off for Tommy O'Brien. This is the Tom O'Brien Show. Have a great evening.